Hello, I want to make this video about what I consider to be one of the most important fundamental concepts of trading and one of the most important things that you just got to wrap your head around, and I struggle with too at a lot of times. If you can think about this, the more often you can think about this, the better you're going to be at trading, in my opinion. And that is a concept of taking one fight at a time and isolating a fight and betting one specific size maximum per fight. So, for example, what I'm talking about is we have it looks like a downtrend right here. So you're looking at this and you're thinking, okay, I'm going to get in at this pullback of this downtrend and I'm going to hope for it to continue. And so what you do is you place a trade and the trade goes on and you think, okay, it's working out. It's good. I'm in profit right here. Now it starts going against you. And you're like, well, I'm going to decide just to add a little bit right here. And then the trade continues and it keeps going against you. And you think, dang, okay, now it's a really good time. I'm going to add more. And so you think, okay, now I'm really going to capitalize on this. It looks like the peak, 1, 2, 3, 4, 5, a little 5 wave up, and now it's going to continue down. And it doesn't continue down. So back here was your fight. Back here was your downtrend. And you saw that downtrend, and that was the downtrend. And as the trade goes on, you added to it, and that was your fight, and it was a downtrend. And now it's not really a downtrend anymore. Now it's kind of sideways market, and you're in this because you were in profit down here, so you want to get back to profit, and you've added some trades to it, so now you're committed to it, and you think, well, it's really high. I'm just going to add a little bit more. And now you're really committing to it, and you're saying, well, this downtrend is bound to come back at some point. Well, now you're really screwed because now the trade has continued. So going back to my the fundamental idea of trading is that your fight was right here, and at any day in the market, you're entering a fight. You're kind of observing the fight of everybody out there trying to battle this market. Say, is it going down? Is it going up? And if you don't have a rule on when you're getting out and a maximum you're going to risk, well, the trade goes on and on and on. And now if you're holding on to this and if you've added, well, your account's already blown up, and you're done. You're toast. So that downtrend, that fight we're in right here, it's been lost. It was lost back here. However, you're still in it. So just keep this in mind that anything can happen. Whatever you think you see in the market might not be what's happening. Whatever you think you see could be complete deception. So you have to understand that when you walk into this fight, you have to know you're only going to be betting a certain percent of your portfolio. So if you have $100, well, maybe you're saying this fight right here looks pretty attractive. Let me put down $2, and I'm gonna bet $2 on this. That's a 2% risk. And where are you going to stop out? Well, that's up for you to determine. But let's say you're entering right here and you're saying, maybe way up here is where I'm stopping out. Or you could try and be pretty aggressive and you can say, I'm nailing this top and I'm going to stop out if it breaks right here. So that looks pretty reasonable right there. Risking 2%, continuation of the downtrend, and then once it comes up, well, now you just lost 2%. Rather than the mentality of, I'm going to add to this. I'm going to always be right. I'm going to add to this. It's going to come back. It's going to eventually work out, because if you don't do that, well, now you're just adding 2% positions all the way up and you've blown your account. So don't fall into this trap. And have this understanding of the market that it's not always going to work out in your favor, and you have to set at any given day, any given time, you have to admit when you're wrong, and you're gonna have to walk away from the computer and say, I'm wrong, I lost. Otherwise, you're gonna end up losing the entire $100, 100% of your account. You're gonna blow up. You're gonna have to go back to your bank and get more money and deposit it into your account if you're gonna want to start trading again. But if you were smart, you could say, I'm risking 2% on this little fight right here. I think it's a downtrend. I think it should continue. This is a nice pullback. And if it doesn't work out, then I only lost 2%. I'm not going to add to it. I'm not going to fall into that trap and get committed to this. I'm going to be able to only risk 2% and say, I am wrong and the trade is over and it didn't work out, and I will come back to the market and survive to see another day. Because if you don't do that, you're going to just cause yourself a lot of stress, a lot of grief, and trading is not going to be fun. So if you ever feel like you're blowing up accounts or you're having trouble and you're risking too much and you can't sleep at night when you're trading, holding positions overnight and keep adding to stuff, come back to watch this video and understand the concept of taking one fight at a time and risking a certain specific amount of your account on that one fight, and that one fight only, and you will not exceed that amount that you're willing to risk on that one fight that you thought you saw was a good opportunity. Okay, that's it. Have a good day.